Good evening to all of you. Welcome you to today's webinar. Today we are going to look at some simple intraday trading techniques and show illustrations in Nifty, Bank Nifty. Now, the last few webinars we have been highlighting the advantages of a Fibonacci trading system. We have been giving the overall idea of how to use Fibonacci. Now, in previous webinars also, we explained what is Fibonacci number, then Fibonacci ratios, and then its applications. In a very detailed manner in the last few weeks, we have been illustrating how to use the Fibonacci. Now, before we go to the topic of the day, we will look at the overall market movement today and look at how it is going to be, how it is poised for the next few days. And also we will look at what idea we gave last week based on the Fibonacci and what has happened. Now let's go to the chart. This is Bank Nifty chart. Last week, if you remember, we said Bank Nifty has a potential to go closer to 42,900 plus, and then probably it can reverse from that particular level. So it went close to 43,070 and then it started to reverse. So all these things are based on the ratios. We have not used other tools like moving average or no trend line. We just use only the Fibonacci to determine where the resistance came. So we said that no, it is earlier we said that no, buy above 42,520 and take profit closer to 42,900. Now that has clearly happened in Bank Nifty in the last 2-3 sessions. That is over. So now let's look at what's going to happen in coming days. But before that, we will look at what are the normal techniques which are there for the in intraday and how we can use it. Now there are different methodologies. See, we have to learn a lot of methodologies. Probably we have to acquire certain skills, but use only certain type of techniques depending on the present day environment. Because let us say you know about moving average, you may know about Fibonacci, you may know about trend line or a few more things that is in oscillators also. But which one to be used at what time will purely depend on your ability to understand. That is where the trader's ability comes. Now in cricket, if you go the batsman goes in a prepared manner, but if the pitch behaves differently, he has to apply certain skills which probably he might have used it maybe even a couple of years back on a pitch like this. So things can become uncertain and you have to adapt yourself to the present circumstances. So that is where a cricketer shines, similarly a trader shines. So you must learn, and because the reason you should know about different techniques is you must know which one to use where. Because if you use only one, let us say moving average, suppose if it is in a very sideways market, then in that case the moving average may not be helpful. So that time you should judge that yes, this is now a sideways market, so we should adopt a slightly different type of system at this point of time. So we should not become very fastidious saying that no, since this moving average it has given me profit earlier, so I should continue to use this. In certain places certain tools may not be helpful. That is where sometimes the algo wins, sometimes the algo fails, because you cannot fit one particular trading methodology for all the scenarios. Okay, for all the scenarios you can build in certain things, for so you can filter out certain things, but filtering out everything is very difficult. Okay, so but the human mind works in a very complex manner. What probably you cannot even feed into a formula, you can probably analyze it and decide to use or not to use depending on the circumstances. For example, let us say on a budget day. On a budget day, you will not try to use any of the system, because things will not work like that. It will move everywhere, all over the place. So at that point of time, you need to be very careful about your judgment and see what you need to do. Okay. So that time probably you may think that if there is a fall, we'll go for an investment. If there is a big rise, probably whatever that you bought earlier, you can probably sell it. So those things you can do. So those circumstances which the events that play out, we have to determine what we should do at that point of time. Now in the present circumstances, it looks to be a sideways market. It looks to be a very calm market. volatility has dropped down very significantly. So per day, every day there is a slight range bound movement in Nifty as well as in Bank Nifty and most other stocks. So let us look at what are the techniques probably are there to help you in intraday trading, and what technique probably you will be applying at this point of time. So now if you look at it, see, I'm listing out certain intraday techniques which are used by traders. This one, open is equal to high or open is equal to low. This is a very good strategy for intraday, and you must apply a filter. Okay, that is probably in your Excel sheet, or if there are screeners, it should throw you the stocks or the Nifty or Bank Nifty or indices which satisfy this requirement of open is equal to high or low. So you can probably keep it for either 5 minutes or 15 minutes time frame. That is, open is equal to high or low. Probably you can keep it for 15 minutes, because if you keep a bigger time frame, by the time a big range would have been made, so then probably going with in that particular direction or trend may find it very difficult. You may find it difficult. So you may have to keep it within 5 minutes or 15 minutes. This is one technique. This is open is equal to high or open is equal to low. So probably you can trade. You can apply the screen. This one is screen those stocks which satisfy this criteria, and decide which one you want to trade within the first 15 minutes of your trading time. Now all these things also depends on your time and resources. If you do intraday trading, mostly you need to spend time. Okay, so for those who are engaged in other work, probably intraday trading is a little difficult unless you know how to use the tool, and you become very familiar and internalized with the system. You know when to buy and when to sell. So for those people, okay, we couldn't say this, but for those who are getting initialized or probably who are continuing with intraday trading, in order to become successful, you need to spend some time at least in for intraday compared to investment. Now, second is gaps. Now, sometimes we see markets opening in a very bullish manner and continuing in the same trend. Sometimes it opens in a bullish manner, but then reverses back. So, to what extent the reversal takes place, you have to do a statistical study of the past behavior, and then decide to what extent probably there can be a fall if there is a good gap up or gap down, and wait patiently to buy at around that point, because patience is very important as far as trading. Now suppose that particular study indicates that if there is a gap up, please wait till yesterday's close comes, or slightly if the price drops below the yesterday's close, you buy, then chances that you will make some profit in the day exist. But in some cases it may not come. So in those cases, in those days, you may not be able to trade what you have seen. So this is the gaps up or gaps down is another familiar technique used by intraday trader. Then you have the moving average. Suppose if you are in a trending market, if you are in a good trending market, you can use the moving average. Probably you can look at 20-day, 50-day moving average of a shorter time frame for intraday. Probably a 20-day time frame. If it is 1 hour thing, or you can use in a 50-day moving average. You can use probably a 50 time period moving average. So that depends on the back study, that back testing of what you have seen. So moving average of a trending market probably can be a little helpful. Okay, so you identify stocks which are trending and apply that. For example, let us say at present Nifty and Bank Nifty are not trending. So in those cases, I think moving average may not be satisfactory. Reliance probably is trending, so you can apply the moving average as far as Reliance is concerned. Then you have got a support resistance pivot point. Support resistance pivot points normally means that the important pivot high and important pivot low, which can be defined as a 2-point pivot or a 3-point or 5-point pivot or 5-point low. Okay, so that is a support resistance pivot points. Normally, if one pivot point is cut, that pivot point itself becomes like a support. Okay, so if it falls below that support place, then that itself becomes a resistance. So this is the first technical study that anybody would have done while getting into the market. So this is very conventional and also a time proven one, and probably can help you to avoid a sideways market also. Support resistance pivot points. So this is one technique. This is 4. Yeah. Then another thing probably much easier and very commonly used for intraday techniques is the pivot point trading formula, which already in most of the websites you will have this the support pivot points R1, R2, R3, S1, S2, S3 will be updated in any trading websites. So this is pivot point formula is used. So how do you use? You may have the pivot point R1, R2, R3, S1, S2, S3. Question is how do you use it? So that is very important as far as the intraday trading is concerned. Then you have got the Fibonacci trading formula, right? Fibonacci, this one, which we have seen extensively in the last couple of days, couple of weeks. Probably doing these illustrations, we will again highlight that probably how you could have used Fibonacci in today's trading, how you can use the Fibonacci trading in tomorrow's trading. These things we will just have a look at it. Then the Dow theory is again the higher highs and higher lows. Normally, you have the if the market goes like this, then this is an high, this is high, this is another low, this is low. So this is higher tops, higher bottoms. So this also we have seen earlier. This is an uptrend, right? So you do a trading of on a 15 minutes time frame or 1 hour time frame or 30 minutes time frame, depending on how the trend is in those particular time frame pattern and how choppy or sideways thing it can become. Based on this, you also look at the Dow theory of system as far as intraday is concerned. Then of course you have got a patterns. So there are familiar patterns that happen. Gap up, gap down is one pattern. Then you've got a squat bar, inside bar. So you've got even in hourly chart you can have a squat bar, hammer. So these are all candlestick patterns that happens. Then inside bar. So these are then bullish engulfing, bearish engulfing. So you got candlestick patterns which can also guide you. So these are the techniques which which can use it for intraday. So what is it that you're going to which technique that you're going to use, okay, on any particular day or any particular time frame will depend on your analysis, your judgment of the market behavior. If it is a very good trending market, probably you can use moving average. If it's not a good the moving if it is not a trending market, probably we have to go towards Fibonacci ratio or probably some patterns. So we have to decide not to use the trend following system in the way normally we use it, that is like a moving average. We need to look at some other concepts or techniques for using this. Of course, there are certain things which I have not highlighted. There are new formulas which have come, like super trend, which is also another trend-based system, volatility-based system. So some of them use the volatility-based system also to look at know what they should do about the market. So these are all the patterns which are used. So we have highlighted some 8 different types of methodologies which are used for intraday trading. So you can choose whichever you want after you have understood or you have enhanced your skills, and then you have to decide which one you should do at what point of time. But suppose if you ask me what is the easiest to be used, okay, the pivot point formula, the easiest is pivot point formula, because it gives you predetermined support resistance levels. It gives you a predetermined support resistance levels. So the pivot point formula, if you know how to use it, then in that case this is one very good system that you can use. Then you can use the Fibonacci. You can combine this. You can combine the pivot point formula with Fibonacci. That will give a robust system. Then some patterns like open is equal to high low. So these are easier techniques that probably you can use. The pivot point formula, the Fibonacci, open is equal to high low. These are things which can use it. So we will try and see whether how do we gel this pivot point formula, Fibonacci, open is equal to high low. So first we will take these two, pivot point formula and the Fibonacci, to decide the type of trading, and then we will also look at what probably we can do tomorrow using this type of system. So we will first look at the Nifty, then we look at the bank Nifty, and we will also look at the some stocks. So now we will look at the Nifty first. Okay. So this is Nifty 1 hour chart. Now first let us go to the pivot point formula. So we will put it a 15 minutes time frame. We'll put the indicators, pivot point formula. So this is what happened today. Okay. So today it opened above the pivot level of the day, which is the 18,115. So this is the pivot point of the day, 18,115. Normally, if there is a significant move which is above the pivot point, the pivot point itself will become a support. So we should not keep any long positions open above the pivot point if it starts trading below the pivot point. Okay. So today, let us say the open was quite high. It was 18,184. 18,184. It just opened above R1. It opened above the R1. Okay. So the open is above R1. Normally we see if there is a big bull move which is above the open itself is above the R1, then probably it has become already a overbought condition compared to yesterday's close, because normally the market should trade anywhere around between S1 to R1. So normal the pivot point formula, it is supposed to trade between S1 and R1. So if it starts to go above R1, between R1 and R2, it will look as if it is an oversold overbought condition. So here we have this the R2 is 18,214. It went up to 18,201, so slightly short of that R2, but the openness itself is very clearly it's above the PP. That is, it is above the R1 also. So what probably we could do is that there are now having got this, since it has opened above the R1, it is opened above the R1. We sell. So in this case, in the pivot point formula, in the PP formula, we sell below R1. That is, since it's above R1 now, if it starts to trade anywhere below the R1, we sell this R1 with stop loss at R2. With stop loss at R2, and the profit target is PP or S1. Okay. So now let's see what happened yesterday and today. Yesterday's close, if you look at yesterday's close, it is at around 18,104. 18,104, it is below the PP. Since it is below the PP of the day, you know that R1 should be a natural resistance that should be there. That is 18,165 to 166 should be the the expected resistance area. So either you blindly sell, but generally speaking, market going above R2 is statistically very less as far as the general trend is. General thing is, statistically it is a very low probability of market trading above R2 or below S2. So these are very few times only such things can happen. So what you do is that you keep a stop loss above 18,214 or 215, and probably you could have sold closer to 18,166. Since it opened above the R1, you can wait for a drop below R1. Okay. See here the R1, the low came here. This particular 15 minutes low. This 15 minutes low is 18,156. So normally, if the first 15 minutes, either it is broken on the upside or it is broken on the downside, the trend will generally be on that side, okay, for the rest of the day. Now here is a case where it also broke above the 15 minutes high. It also broke below the 15 minutes low. So very clearly, if it has already broken above the 15 minutes high and then it breaks below the 15 minutes low, then it becomes a very clear case where probably we can go in the direction of the sell side, because first it tried to show the momentum on the upside by making even the first because the first 15 minutes is always crucial because of the pent up feelings. Now the second 15 minutes it is carrying along with the first 15 minutes trend by going up, but after some time the market decides to do something else different and starts breaking the 15 minutes low. If you get such a pattern, it is wonderful to go for a short, and it is also below the R1. So you can put the R2 itself as a stop loss, or whatever I that you got till now 18,201 as a stop loss. Then it came closer to the 18,114. 18,114. So today it has already closed below. Of course, we have to see what is the pivot of the day, but it might have closed below the pivot. So if you look at the today's range, 18,201 and 18,078. So we'll look at the pivot point for tomorrow. 18,201 plus 18,078 plus 18,101. So the pivot point is 18,126. So it has closed below the pivot point. So first of all, tomorrow it has to go above 18,126. But last couple of days we are seeing that 18,175 to 18,200 is acting as a resistance. So let's look at the R1 for this 18,126. R1 is 18,175. So tomorrow, let us say based on this, R1 is 18,175. Okay. PP is 18,126. S1, which is a likely support level, $18,050. So we will go to the Fibonacci a little later. Now let us say 18,050. S2 is, say we have got one, this is approximately today's range is 122 points. So 18,120, it is approximately 18,005 or so. So mostly there is a very little chance that it can go much below this. We have got S1 at 18,050. Okay. Then R1 18,175, PP is 18,126. So let us look at the first expected range tomorrow could be this. Because it is a sideways market, 18,050 to 18,175 is what you are expecting it to be. Now, let us say tomorrow, like today, it opens a little. Unlike today, it opens tomorrow with a slight weakness. It goes for 18,050. So the first 15 minutes, it just goes down. Then it starts to look for a revival. Okay. Then in that case, you can look towards going on the long side, with the possibility that it can again hit 18,175, 18,175. Or what you do is that you have to decide that since it is 18,105 or 106 today close, if there is a good break above 18,126, then you go long, exit at 18,175 with a stop loss immediately at 18,050. Okay, first stop loss put at 18,050. So this is the trading plan as far as Nifty is concerned in a sideways market for tomorrow. So this is what you keep it. Suppose if it doesn't go straight away above, if it starts to fall, then in that case, let us say 18,050 can be one support. It can come closer to 18,050 and take support. The next support will come closer to 18,005. So you can decide that probably you can look towards going long at 18,050. The second contract you can add closer to this, and you can put in a stop loss below 18,000. Can put in maybe 17,990 or so is a stop loss. So tomorrow's thing will be a buy at 18,050, 18,000, approximately 18,010. Stop loss maybe 17,995 or so. First target will be 18,125. Second target 18,175. This is on the buy side. This is the trading plan based on the pivot formula. Suppose if it goes on the higher side, sell at 18,175. Stop loss, okay, we have got R2 is slightly higher because R2 then will come closer to 18,240 or 250. So you can put in a stop loss at 18,205 itself. 18,205 itself we can put in a stop loss. So this is the Fibonacci, this is a normal pivot point formula, okay, by which we have calculated that this is likely to happen. This is what we should do. Now we will look at the Fibonacci. Now so this is the low of 18,016 because this seems to be a day's low, because let us look at the day. You can see, right? So this is 18,016. Now this is 18,183 and this is 18,201. So this is around 20 points higher than this. So normal support can come at 20 points above 18,036, and that is what we said, 18,050. So 18,050 seems to be a reasonable support. Now we will draw the Fibonacci from this level to this level and see what happens. So for which we will take the 1 hour chart so that you can have better clarity. So that means this is coming from this place, right? So we will draw this. So 78.5% retracement comes closer to 18,050, right? So this is what we said. This is an important support. So 18,050 is one important support. So that means we are not even waiting for 18,005, and S1 is also coming closer to 18,050. Combined, based on this, we are looking at something like 18,055 as the support level for tomorrow. 18,000, and if you see there's a resistance, the Fibonacci resistance are since if it is fallen, if it is falling to the lower side, if it is above 18,054, it should have a resistance coming closer to 18,107 to 18,129 to 130 levels. So what we can do is that either between 125, which is the PP point, we can take the profit. We can take the profit at that level. So 18,050 with a stop loss we can put even below this, because this is an important low. So we don't even expect 18,005 to come, but if it comes, still it is still a worthwhile buy for tomorrow. So 18,015-16 is a very important level right now. So we will buy up to 78.6% retracement of that level, which comes closer to the 18,054. So we will buy up to 18,050, and then target at 18,125 on the downside is what we will look towards. On the upside, the R1 is 18,175, and the resistance now, because 18,175 to some extent will be, suppose 18,201 to 18,150 is 150 points. 150 points, 0.235 approximately will be 30 points. 18,170, 175 will be a reasonable level where we can look towards probably for the day. There could be a resistance, and 18,175 we have seen many cases. 18,183 there has been a failure, okay, and here also no, this is 18,225. So this place which is 18,140. So many cases we have seen a lot of failures at this place. So 18,175 looks to be a reasonable level at which probably we could look towards exiting our position, okay, exiting our position. So this is using the pivot point formula as well as the Fibonacci and applying it in Nifty. Now we could use this for position trading as well as for investment purposes, which we will look at it on Friday when we review what happened in January and what is the strategy for February. Now we will look at the same illustration as far as Bank Nifty is concerned. Now Bank Nifty, so first we will look at the same Fibonacci formula. Now this is an important low, because this is what we said earlier. So we are now going to work from this low, okay, from this low. We can also look from this low also, which will come to it later on. So this particular low, from here I have drawn the Fibonacci right now. So there is a support. First support came the 38.2% retracement. It just held for some time, then it broke down. Now then it has come down closer to the 50%. If it breaks down, it will go to 61.8. So you can buy at 42,550, which is the 61.8%, and 42,000, this is 410 or so. So we can buy 42,553 based on what we have seen. Okay, so Bank Nifty right now 42,550. That is also an important high, right? It broke that. Then stop loss 42,410. Stop loss 42,410. Buy at 42,550. So this is based purely on the Fibonacci formula. If it comes to this level, so let us look at the PPR1, R2, S1, S2 for this. Now today's I is this is today's I, right? So yeah, this is today's I, 23rd. Okay. Now 43,078. 42,615. And close is 42,715. 42,802. So this has closed below the pivot. Here the PP is 42,802. So let us look at R1 and S1 for this. So the low is 42,615. So R1 is 42,990. So R1 is 42,990. Okay. S1 42,802 into 2 minus 43,078, right? It comes to 42,525, right? So that is why we said, say, this Fibonacci formula 42,550 and 42,520 is coinciding. So what you do is, if there is a fall, you buy at this. Profit target, first target is this. Target 1, target 2, target 2. Now since this is in a slight uptrend, no, I would prefer not to go for a sell. But if at all I have to go for a sell, what will I do right now is this. If I'm removing this, or probably we can look at this. See, this one, the 23.6% retracement came to 42,881. So we expect that, no, if there is going to be a rise immediately, it should not break 42,880. We have said that R1 is 42,990, PP is 42,806. So what probably we can look at is, either it can go up to this I, which is 42,865, or it can go up to this, which is 42,000, close to 43,000, say. Okay, so now the trading call will be to put the 71.8% retracement from this level to this level, let us say. Now if it is going to go up, 42,975 will be a resistance. So you don't need to wait for 42,990. Immediately if it is going to go up, you can sell between 42,899, 42,975. So probably you can look towards selling closer to the 42,925. You can sell closer to 42,925. Put in a stop loss above the R1, which is 42,990. You can put closer to 43,000. So if it's going to rally straight away from here, our target will be to sell Bank Nifty for the intraday at around 42,925 to 42,950. So this is the area of sell. Stop loss will be above 43,000. Okay. Target, if it's going to go straight away up to that, it can come up to 42,550. If it is going to go down, we buy at 42,550. Okay. First target, as we said, 42,806 or so. Second target could be this 42,925. Okay, and if it is going to go even further lower, maybe you can put 42,405 or so as a stop loss. Okay, so we have used both the Fibonacci formula, and we have also used the pivot point formula. So both of this are giving this particular value, and now we can look at whether any other Doe theory or some other thing will be helpful for us. So we will look at let us say daily chart. Daily one, we will look at it. So since this has broken this low, see what has happened is this is an important high right now because it has broken this. So that means this day is going to be a important high. So that means 78.5%. If it is going to go up straight away from here tomorrow without any fall, chances is that it can get resisted closer to 42,925 to 975. So intraday, it is a very safe strategy to sell closer to this level of 42,925 to 950 and put in a stop loss above 43,000. So it's a slightly safe strategy with a first target coming closer to 42,550 levels. 42,550 levels. And maybe the next target is coming only because this is on particular day's low, which is coming closer to 42,335. So slightly far off, or otherwise we should get this. See, this is 42,000. This 42,489, 42,490, and this is 42,555. That is why the 42,555 is important. So 42,555 is an important support because it was earlier resistance. There was some hesitation around that. So now, going by the support resistance formula, we are getting 42,555 also as an important level of things. So buy closer to 40,555, put in a stop loss below 42,400 or so. If it go up, 42,925 is going to be a sell. So it's an interesting thing. So we will mark it. This is a Tuesday thing which we have said. Let us review it on Friday, and what happened on Wednesday, we will see it on Friday. So this is the so we have used very simple thing. There is support resistance thing, Fibonacci and pivot point formula. Based on this, we have come to a conclusion. So this is the preparation that we do before we enter the trade. So because any trading plan should contain very clearly the levels at which you are going to buy, the profit target, and the stop loss that you are going to employ. Okay. So whether it is going to do it in a cash market scenario or whether you're going to do it in you're going to do that for in F&O case, the way the analysis is the same. Okay. So now let's look at one or two stocks. Let's look at probably Reliance. Okay. Now Reliance 2385 is a. Let us see whether 2385 is a important support level based on the Fibonacci extensions. Now let's look at the bigger ones. One is the 2364. 2364 is one. Okay, so we will remove this from this level. $23.79. $23.80 to 24.01. So 23.80 is what probably you would have been expecting based on this, and it came to 23.87 and started to move up. Now we will look at the what we should do now. See, this is a right now according to us, this is an important high, right? Because this it broke this low, so this is an important high. So let's draw the straight away the Fibonacci retracement for this. So to what extent it can come is a 78.6% retracement, which is 2467, But we have got multiple resistance now coming. It has closed about 2411. If you see, the 23.6% retracement has been taken off, which is 2411. So tomorrow for the intraday, considering that this is a good pattern, no, this is a type of hammer pattern, and it closed above the 23.6% retracement of this move, we probably expect that the fall will not be below this, which is 2387. Fall will not be below 2387. So based on this 2443, 2387 and 2415, let us look at what is the S1 for this. Now PP and S1, 2443 plus 2387 plus 2415 divided by 3. It is 2415. It has closed exactly at the pivot point. It has closed exactly at the pivot point. So let us look at the S1 for this. S1 is also the same low of 2387. So since it is closed exactly at the pivot point, the S1 is also 2387. So it may not go much below 2387 is our first expectation. So we can buy at any point above between 2411 and 2387 and put in a stop loss at 2387. So this is the first conclusion that we can draw as far as the Reliance is concerned. Now, are there any other Fibonacci's which can be helpful for this? So because Fibonacci, there is a multiple ways of doing it. So there's no hard and fast rule. I am doing a Fibonacci trend extension between these places. Okay. Now I got one close at 2402. So 2402, according to me, 2401. So we can buy closer to 2401 and put in a stop loss at 2387. So 2400, closer to 2400, you can go for a buy and put in a stop loss at 2387. That's for the intraday. Now let's look at where all it can come. Probably this move. We'll draw the Fibonacci. The biggest thing is we are going to draw a cluster of Fibonacci's from here to this low. So this is quite high, which is coming only at 25.26, right? During 23.5% retracement, we drop this. Now let's look at this place. That comes to 2438. So the resistances that are going to come right now will be 2438 to 2470. 2438 to 2470 are the levels where the resistances could come. So based on this, the Fibonacci resistance is going to come for Reliance based at 2438. So the first resistance will be 2438 and then 2470. Now we'll draw from this place to this place. So here you see it should not cross 2467. 78.6% comes at 2467. Now here the 50% retracement also comes at 2438. It has closed at 2415. So tomorrow when it starts to move up, what are the resistances that we are likely to get for Reliance? First resistance 2426. Second resistance 2438. Okay. Third resistance, fourth is last is 2467. It closed at 2415, right? So we need to be a little bit realistic. It should not go about 2443. So 2438, 2426 to 38 seems to be realistic. Worst come is it go to 2450 to 2467. So these are all resistance areas. So what probably we can look at it is if it is going to since it's closed at 2415, If it flicks it, then sell at 24.38. Okay, next level, go for a sell at 24.50. Okay, keep this as a stop loss even for intraday. So the first resistance that we are planning to look towards is to sell. This itself will be a resistance. This itself will prove to be quite an effective resistance. But let's wait and see. Probably since it's closed 24.15, chances that it could probably break that and go up to 24.38. Okay, and so that is a good level of resistance. So 24.38 is a level where we can go for a sell. If it goes a little more higher, we can go for a sell here. We can keep this as a important stop loss. Why this 24.38 is also important is that if you look at the Fibonacci cluster. We draw the Fibonacci from this place. You can see 24.40. Right, so 24.40 is at 23.6%. So that's why I'm saying 24.38 could be a very important place of resistance. Okay, and let's look at the Fibonacci from maybe from this place to this place, all will be the same. So and also let's look at this. See, this is the first level, which is the 24.26. So that's why I said this 24.26 itself can be a very important resistance. Failure above this, also this important, the next low, which is 24.37. So 24.26 to 24.37. So 24.37 can become a quite a very effective resistance, because it would not have crossed 24.43, which is this high. So after 24.37 we can look for a sell. The first resistance will come at 24.26 itself. Can come closer to 24.26 itself. Okay. So Reliance, since it is in a streaming downtrend, we can look at moving averages also, but we don't need to have too much of this. So right now at this point of time, we can say the pattern makes it clear that it is an hammer pattern. It is an hammer pattern, and it has let us say it has closed above this. No, it is not closed. So there is no significant close above any particular low or close. Nevertheless, this pattern we have to respect, because there is a pullback doing from 23.87 to 24.15. We need to recognize this pattern, hammer pattern. So we feel that 23.87 is going to be a very important area of support. So the first Fibonacci, one of the Fibonacci thing that we can look at is 24.01. 24.01 to 24.02 can provide the support. So you can buy closer to 24.01, put in a stop loss below 23.87. Target could be 24.26. This is for intraday. If it goes from 24.38 up to 24.38, go for a sell closer to 24.38. Put in a profit target either 24.25 or 24.01. Okay, and if it goes a little higher, 24.38, 24.50, both are sells, then the stop loss will come about 24.67. About 24.67. Okay, so this is as far as the way that the trading aspect should be considered. And we have shown Reliance. The same thing you can apply with other stocks which are looking to be in a trending. Now you can look at probably ICICI. You can do the same Fibonacci thing as far as the ICICI is concerned. You can draw the Fibonacci from this place to this place and determine what are the important support resistance. Since it's forming a higher top and higher bottom, you can draw a 78.6% retracement for this move. So this is the one. So you can draw a 78.6% retracement that comes up to 863, 867 to 863. Today it came down closer to the 867 levels, right? So 867 levels it came. So up to 863, probably there is a chance that it can go down, right? So 863 is a place where you can buy. Probably put 860 as a 858 to 860 as a stop loss as far as ICICI is concerned. I'm not using any big trend line, but if you still want, you can connect these two and draw a parallel line. So this line is going to be an important support. So if it is going to come closer to this, 864 can be an important support, 864 to 865. So you can buy closer to the, because 2 days it has not crossed below this. So 864 to 865 you can go for a buy. stop loss at 860. So ICICI closed at 871. So probably you can look towards ICICI at closer to 865. Okay, stop loss at 860. Maybe 870, 872, 873 you can take the profit. So this is how you plan. Keep yourself ready with various other techniques that probably you'll have. You can use a trend line, you can use Fibonacci, you can use a pivot point formula. Okay, so based on this, you keep what are the areas where probably the resistance supports can come, and then trigger your trading ideas at that point of time. Okay, so thanks very much. You can ask your questions now. See, somebody had asked, values are confusing. The pivot point formula value already, it is listed in, if you can put it in Google search also and can find out. Since this is not the seminar to explain exactly the formula, we are just only doing the illustrations. Formulas we have already explained in so many previous webinars before. So you can look towards pivot point trading formula and find out what the formula is. So we have only done the values calculation only from the pivot point trading formula. Based on that, we are given these ideas. Okay. As far as the Fibonacci is concerned, we have also illustrated that the Fibonacci, we have used the drawing tool in the trading view. We have also said before that how you should calculate the retracement from one pivot point to another I, as far as the retracement on the downside is concerned. Ulta, if the market starts to go up from an important pivot I to the present low. So this is how you should use the Fibonacci ratios, and we have already highlighted that the most important ratios are 38.2 and 61.8, and the last important point is the 78.5% retracement. This is what we have used for giving illustrations. So if you can look at the last few webinars on Fibonacci, you will be able to find out exactly how to what is Fibonacci number, what is Fibonacci ratio, how to apply it. So that will probably answer your questions. So thanks for your participation. We will keep explaining this. So please join us every time when we do webinars. We will explain these things, and so that you become quite familiar of how to use it. Now, whatever that we showed today, we will show it again on Friday and say that whether it worked on Wednesday or not, because these are intraday. We are not going to carry it for the next day. On Wednesday, that is tomorrow, what happened, we will show it on Friday. Okay. Thanks for your participation. Good day. Bye.